The big corporate voice is promised. Amitabh Chaudhry, MD and CEO at Axis Bank, he spoke with Nikunj earlier and discussed the ROA, NPA issue in power, retail as well as corporate book growth as well as the road ahead for subsidiaries.
So if you look at our cost of funds in last 1 year, it went up by 58 basis points, though our NIMs in spite of that kind of inched up. So we were able to pass on some of those cost increases to our customers. The reason why the cost of funds has gone up is because of generally the cost of funds in the market went up. Secondly, our CASA did come down, as you rightly pointed out, and we have obviously relied on term deposits to compensate for that loss of market share, let's say, in CASA. We are concerned about it, and this has happened over the last 3 years. So in one of the restructurings which we announced effective April in our retail business, we have created a completely separate new acquisition engine. We can just focus on ensuring that we are getting some of these CASA things in. We have also brought in, created a new group called Commercial Banking Group, which can focus on the CASA side. We have been one of the largest players in the government business, and we are investing more money there and more resources there to ensure that we continue to gain market share as we move forward. So there are various strategies which we are going after to ensure that we can get this CASA engine back. Please understand that the larger banks are losing share in especially SA because our interest rates in comparison to some of the others are lower because we have a huge SA franchise, and to just change the interest rate on that can be very, very expensive. So we are trying to go to our customers and saying that, you know, you do maintain a certain amount of SA balance, and if you believe that there is a balance that you have which is beyond that amount of money which you need for your day-to-day use, you can open a term deposit. So overall you are better off in terms of the potential returns you get. Other banks are having a slightly different kind of conversation, and you know, obviously both will run into each other on a regular basis. We just need to work harder, very clearly.
Your guidance on ROA, I'm assuming that does not include any fundraising, because if you're looking at that kind of a guidance, that means that for next 18-24 months you'll not raise capital.
We have said in our actually guidance that we are assuming one capital raise in this next 3-year period. Let me give you some data points. The Axis Bank in the last 10 years, on an average, has used 45 basis points of capital every year, on an average. Last year we used 40. The warrants, which are in the money right now, in June, if they get converted, will give us another 40 basis points of capital. So we do believe that in the next 9 to 12 months we don't need capital, but we definitely know that we'll need capital if we grow at a certain rate in the next 3 years. At the same time, you know, we realize that we cannot, you know, just go to the market when we need capital. Sometimes the market is not ready. So we need to ensure that we go to the market when there are enough investors also want to buy Axis Bank stocks. So we'll time it accordingly. But no, we have guided for a capital raise in the next 3 years.
And even that uptick in ROA, that includes the capital
Yes,
raise,
absolutely.
which means you're looking at significant efficiencies kicking in.
So you look at ROA or you look at the return on equity and you look at the walk to that particular data point, it is about obviously reducing our credit costs. It is about improving our NIMs. It is about bringing our costs down from today. They are at 215 basis points. If you look at our OPEX against assets, we're talking about bringing it down to below 200 basis points. So there are a lot of small elements. Yes, this is obviously based on very specific plans. We have to execute well on them, and if we do believe we can get to those numbers.
Okay. Your exposure to NBFC is about 6% broadly. What's your understanding there? First, without getting into specifics there, because I'm getting different versions from different stakeholders. Some are using words like temporary, some are using words like train wreck. Would you like to use a word which is in between temporary and train wreck?
I think NBFC crisis will take 18 to 24 months to play itself out. In that, there will be some train wrecks of some specific NBFCs. I don't know which ones, but IL&FS happened. I think some of them, then some other names came up, some new names have come up, but I think there will be some train wrecks. But the fact that right now the crisis is on the liquidity side, and so you're seeing growth rates for NBFCs fall. Some of them become cautious. Some of them just cannot lend because they just don't have the liabilities to lend. So that's one part of the crisis, and as a result, some of them will suffer, some of them will close down, some of them will get sold. There is a second part of this crisis that when you actually stop growing, then people start, you try to sell assets. And obviously you sell the best assets first because that they're easy to sell. But then you're left with more and more riskier assets because you've sold the best ones. So I do believe that you will see some crisis emerge even on the asset side, in the sense that when these companies try to sell themselves, or they sell assets which are good, they will maybe not get valued as much as maybe they're valued today. I know a lot of them have come off in terms of overall valuations, but a lot of them are not necessarily listed. You will see valuations which might impact the market, or market will get surprised by some of those valuations. So I do see some kind of, the problem in India is it doesn't happen at one go, it happens in bits and spurts, and that thing will continue for the next 18 to 24 months. So which name could appear, which name could go through a bit of a crisis, one does not know, but I think in India, like everything, it will take 18 to 24 months.
Do you think the problems of power sector are behind Axis Bank?
If you look at our BB and below book, the biggest number there is power still. So while we have recognized a lot of power assets as NPL, there are still some power assets which are operating as we speak, but they are still kind of stressed a little bit, and that's why they are in the BB and below book. It will take some time for it to kind of work its way out through the system. No, I don't think the power crisis is generally over. The number of bidders who are emerging for power assets remains very, very low. They are few and far between. And as a result, if some of these assets go into NPL, I am quite concerned as to who will buy these assets as we move forward. So no, again, the power sector will take some time to get it cleared completely.
A couple of years ago, when the whole concept of watch list was introduced, and that in a sense market conditions forced you to relook at it, can I take that this time around, the numbers you're sharing, that irrespective of what happens to the world, you will not have problems beyond that? Are you being very conservative here this time?
No, I mean, you can't become conservative overnight. You have to, in the sense that you can become very conservative about what you're lending, but some problems that you already have, it will take time for you to resolve them. I mean, I can't overnight make them better. Overnight also, I can't come to the market, and I did not want to do that, to throw a kitchen sink and say, okay, I have X 1,000 crores of problems, and after that I'll not have a problem. Because that's not the right way to do it.
A lot of banks have done that in the past. SBI has done that in the past.
Then it creates a legacy of just throwing a kitchen sink. I did not. So I've always been saying that the right way to do it is that if you want to get conservative, do a formula, calibrated, transparent way of doing it. So what we have done as a first step in this particular quarter is that we have looked at our SMA2 accounts, we have looked at our BB and below accounts, and looked at a combination of the two, and said that we will start providing for these numbers, and as a result there is a certain provision which we have made. We have made 1,300 crores of excess provisions in this particular, or extraordinary provisions in the last quarter which has just gone by, and we'll continue to make that as we move forward. Now that is based on historical data, and we would like to continue to add some of this stuff. Now we are going to look at our security of a lot of the accounts and see whether we have the right kind of security available. So we will just be very, very tough about some of these things, and rather than just throwing the kitchen sink and being careful and looking good going forward in the future, we want to ensure that we institutionalize this practice so that in future, if a problem happens, I think Axis Bank does not stand out in terms of reporting some large unexpected numbers. That's all the objective here is.
Okay. Now, nobody anticipated the problem in the power sector or the telecom sector or aviation sector. I'm not blaming bankers, but the economy has changed, the competition has changed, lay of the land has changed. The latest problem, one is NBFC and second is promoter lending. Is there something which you're careful of, you're cognizant of, you've not accounted for, it could have a problem?
So we don't do that much of promoter lending. Yes, we have at the promoter level, if they have some assets, we might have lent to those assets. The little bit of promoter lending which we do is done in Axis Finance, which is a very small NBFC. It recorded its first ever NPL in the last year, and we, by the way, do expect to recover most of it in this financial year. So we are quite cautious about doing this share lending, as you call it. It's a very, very small part of our portfolio. We also do very little LAP lending. LAP lending in Axis Bank has been quite small. But that does not, please, let's understand that if a lot of people have lent at the promoter level, and it is share lending, let's say, and the promoter goes through a crisis or has a liquidity issue or whatever that might be, it does, as a second or a third order impact, does impact some of the other businesses and assets. There might have been till now maybe pumping in money to support some of the loss-making assets. If they suddenly come under pressure, they might not have the finances or the wherewithal to support some of those loss-making assets. So it does impact you. So if the lending in the system suddenly stops, your asset might be weak, but suddenly starts looking
differently.
Very differently, because suddenly there's no longer funding available. So we have to be cognizant of those issues. I think that the lesson here is that you should be careful about lending at the promoter level and what assets you're lending against. And if they are loss-making assets, I think you need to work much harder on those assets to recover your money. So I keep saying, I don't think the crisis is over. I think we've recognized and got our arms around it. We are being very watchful, but still a large portion of our book is coming from power, EPC, roads and stuff like that, and all this lending has been done long time back, and the number is still 7,400 odd crores. So let's see what happens. I mean,
okay. So a couple of forward-looking, questions. Not this quarter, not this year. When I asked your predecessor about insurance, I would always get a yes and a no kind of an answer. You've gone on public and said if a good asset is available, I'm open to buy it. So is insurance a must-have on a 3-year time frame for Axis Bank? Whether you buy it this quarter, next quarter, that's debatable. And if I ask you open answer, I'll not get open question, I'll not get open answer. But is it something which is must-have?
So firstly, a disclaimer clause that anything we can do is subject to favorable dispensation from the regulator, and I think RBI has been quite clear that they're not necessarily very favorably inclined to allow banks to buy into insurance companies. They have their own very valid reasons for it. I completely understand and appreciate where they're coming from. So disclaimer clause. Now, assuming regulator was willing to look at it positively, I think the onus is on us as a management team and as a board that we create value for Axis Bank shareholders. Now, if potentially there is value level on the table where we can get a reasonably large stake at a very decent price, which can create value for the Axis Bank shareholder, we have to look at it. Right? We have to. Now, if if the regulator allows us to look at it or is favorably disposed, we will definitely go out in the market and look at what transactions are available. Invariably, Max's name comes up. And before you ask, let me kind of just bring it to the table, because we have had a partnership with them for the last 10 years. We are the largest partner for them. We account for 65–70% of their sales.
So what are you saying, yes to Max?
No. I'm just saying that that's why the name comes up, because people immediately say that, okay, then Max is an obvious buy. Yes, if let's say there was a willing seller in Max, and because we have a partnership there, it's one of the names we'll definitely look at. I mean, it's obvious. I mean, I don't want to say it. It's obvious. But we will have to look, again, as part of our corporate governance, all the other transactions which are available and see what will create the maximum value for us. We are not there at that stage because the disclaimer clause is still valid. And if that stage comes and we are ready to announce anything, we'll obviously be happy to share with the market.
So how could so let's look at two things. One, I'm assuming that at your size, you will not go down the barrel. There are 24 insurance companies in India. You'll have to stick to 3, 4, 5. If you are ready with a proposal, would you be approaching Reserve Bank of India? Or would you first? How will this entire communication?
I think there is no point in approaching the regulator if the regulator is giving you an indication that they're not favorably inclined towards approving anything. I mean, what is the point?
So acquisition in the short term is on the back burner.
Well, you're trying to pin me down. We believe Reserve Bank of India is working on this concept of non-operating financial holding company. I think that will solve a lot of problems, both from the regulatory standpoint as well as, say, a bank standpoint. So we are hoping something will come around that, hopefully soon. I don't know what that soon is, hopefully soon. If that was to come, obviously we have to first focus on the bank and get that done, but that will allow us much more flexibility in terms of looking at, say, as you said, insurance opportunity. We believe an insurance opportunity can create value for the bank, and at that time we'll definitely look at it.
Okay, so final question. The way we, at least market, perceive Axis Bank is that it's a corporate bank with a retail focus, right? And that explains why the price to book or the P multiple the stock gets is because it's a corporate bank with a retail focus. But in your own indication, the retail book is about 50% now. So what is the definition of Axis Bank? A corporate bank which has become a retail bank, or a corporate bank with the retail focus?
I've heard it for the first time that we are seen as a corporate bank with a retail focus.
Well,
I think it was started its journey as a corporate bank. You very rightly put that. And retail bank is a kind of a franchise that got created only over the last 10 years. And even the subsidies have come about over the last 10 years. We want to be seen as the neighborhood bank. When people turn around, we want to be seen Axis as someone who can provide all the suite of services which they're looking at. Be it retail, be it corporate, or be it SME.
So the reason I'm asking this question is because that's a market perception.
So we are working on the repositioning of the bank. You will hear about that in the next 3 months. You will see a consistency in brand identity which maybe was lacking to some extent in the past. So wait for another 3 months and you will see this.
So retail and corporate will be equal split. What I'm trying to understand.
We are not trying to reach a number per se, but today retail is growing at a faster rate than corporate. So I think we will become a bigger retail bank than corporate till corporate kind of starts growing at a very different pace. But today, if I combine SME as part of corporate, it's 50-50. I think the ratios might change a little bit, but we don't foresee a situation where we become predominantly retail. I think we need to keep the balance. There is a value in keeping that balance, and we'll continue with that.